review online, look online,
yes,
and purchase
research
offline,
online,
right?
purchase offline. Yes.
Okay. So it's probably opposite of what some people do in cell phone, where I go to Sangeeta or Chroma and I look at it and then I go and look for what the best deal is. You're saying the opposite could happen here.
I mean, test ride is an important piece.
B2B EV financing. Huge opportunity. I think so many so many fleet operators are emerging, so many new companies building battery swapping or just battery swap station businesses. All of them need capital and all of them struggle for capital. This is an area that Ohm Mobility operates in also. Hi, my name is Nikhil Nair. I'm the founder and CEO of Ohm Mobility. Ohm Mobility is an EV financing platform, and I've been an EV entrepreneur for 3 years now. I spent 13 years previously working in different sustainable energy businesses in India, Middle East, and East Africa. I'm very passionate about the space of electric vehicles, and I'm extremely excited about the opportunity that EVs provide both for India and globally. Today, I'm here at the Blume's office to talk to two people who have written a very important report in the space of electric vehicles, Venkatesh Modi and Arpit. They both put together a report last year called the EV Primer in 2022, which was very well received, and most people in the space have consumed that report. And in 2023, they provided an updated version of that report. I felt there was a need to convert that report into a video audio format so that it can be consumed by a larger audience who appreciate the video audio format. And here we are in Blume's office to have a conversation with them and decode several aspects of the EV ecosystem. I look forward to the conversation with them, and I really hope you enjoy it as much as I do. Welcome back to another episode to continue our conversation on EV ecosystem. Arpit, Venkatesh. We want to cover a little bit about EV distribution. How do OEMs reach customers? Because the world has been built up by having physical presence, customers going in and buying vehicles in the store. And with EVs and digitization across the board on people buying online, how do you think that's going to change? How are EV OEMs going to adapt to building large distribution? So it's a open question to explore some of this. And if you all can go.
So one thing that we have observed, and this is going to happen, actually we should go back to one important piece about the EV business itself. The important piece about EV business is that making an EV is a relatively simpler process. And as a consequence, the size of the company required to build an electric vehicle in the market is not as large as going to be, let's say, a Hero MotoCorp or a Honda HMSI or someone else, because it is fundamentally a simpler product. Now, what does that mean? One, of course, it has higher mechanization, and therefore you will probably have smaller companies and smaller brands selling the same quality product at the same price as compared to what used to be a much larger blockbuster kind of product. This will allow you to have a lot of segments. So you will see that there will be a segment for younger population, mid population, older population, student population, delivery population, and different things which currently get served with the same product, more or less. Which I think is an important piece that we have to keep in mind. We discussed it last time that OEM business will experience a lot of volumes, a lot of variants, a lot of different models, and probably different segments also. What does that lead to is, you will also see someone who's able to help the customer make the purchase. And therefore the influence of either the offline or the online methods will actually be very high. It is not going to be very simple saying, okay, I want to buy an Activa, and therefore I'll go and buy an Activa. An Activa is very standard product. There's not much discovery required, but the process of discovery is going to be little longer, because while there will be some blockbuster products, there are so many other things also to consider in buying a product in the EV world, because there are too many variants. We think that research online and purchase offline as a paradigm which has already been established in this industry over the last about 10-15 years will continue to hold, and therefore new distribution will actually leverage this kind of a behavior. And every new company will have to then start building the research online first, and then people will have to then transaction, of course, will have to happen offline mostly. That is one piece. You'll also see that a lot of the dealer business models are going to experience significant change. And Venkatesh can talk more about it. We have some numbers that each of the dealer who's currently dependent a lot about on the sales after sales service will actually have to go through significant change in the business model, because there is not going to be a lot of repair that you can do for an electric vehicle. So it's a evolving area. We have some ideas at the onset, and a lot of things will evolve. Venkatesh, you want to talk about how the dealer business models are?
Yeah, so I think, like Arpit mentioned, typically I think OEMs traditionally had a unidirectional movement of vehicles, and the relationship also OEM would probably tie up with a distributor, and the distributor would ultimately, let's say, have a store or something, and then they would have a relationship with customers. But with EVs, it is bidirectional because you are also dealing with how the experience of the customer is going to be once he buys the vehicle, right? There is financing involved, there is charging involved, there is after sale service involved, right? And this is something, because EVs are a new brand of vehicles itself, it is impossible for a OEM to say that, okay, I have made the vehicle, it's now your responsibility, because customer does not really know, like, where do I charge this? What happens if this is not working? If let's say a motor is failing, right? In that case, typically India, there are hardly any mechanics who can actually, let's say, repair EVs also. At least you can't find them very often. So I think that is like a big difference. So outside of that, we also think that I think multiple models are evolving. So one of the, let's say, grids that we have is around whether it's company owned, company operated, or franchisee owned, franchisee operated. Within this, you can have four matrix actually. The second matrix that we have is around, let's say, are you actually using a distribution which has a single brand and it has a single channel, and the other could be multi-brand or multi-channel, right? So within this, you have four options as well. So I think everybody is migrating towards what typically are their strengths also, and choosing what works best for them. For a two-wheeler, multi-brand might make the most economical sense, but for, let's say, a car or a three-wheeler commercial, it might be single brand but multiple channels, right? So I think these are some of the variations that we are seeing. This is definitely like a big disruption as well. And again, I'll bring back the point about Acer launching a vehicle with a startup, right? They have cracked distribution, right? Globally, they know how electronics are moved. They know how electronics are going to be serviced, right? Laptop service centers. I think right now we probably underestimate because the laptop qualities are so good. But back then, like 10 years ago, your laptop would like break down every, I think, couple of months, and you would have to go and get them serviced, and you will find those dealers and those workshops. So I think similar to that, I think it has to evolve, and that is probably where this is going towards. That's probably one view that we have right now.
Yeah. So great points, and I think I agree with some of this. We've also actually done a lot of work with dealers lately. We have engaged with OEMs and dealerships. So we think a couple of challenges and huge opportunity. Number one, EV sales per store is low across the board. So you take any big OEM, any big EV seller, any medium, or any number 15 to 20, they're all selling 10, 15, 20, 25 on average across the store. The best store might be selling more, but even best case maybe 40, right? Now, if you take that to the IC world, they sell minimum 100, typically 200. Last week, I visited a dealer who sells 1,000 scooters a month in that store.
1,000 scooters in one store?
In one store.
In a month?
Yeah. ICE, not EVs, ICE.
Yeah.
Right? So the fact that they have 6 financiers sitting there makes sense. There's enough for everybody to get financing. You walk across the road to the EV, the guy is saying, we had a great month last month we sold 35, right? So I think the volumes itself are fundamentally low, and I think therefore people have to think about, therefore the shops also quite small. When we have visited some EV shops, it's been back and beyond. He said, I can't pay rent more than 15,000 rupees, right? Whereas somebody else is happy to pay more because of volume. So I think one challenge is sales per store is still quite low. Second is, I think people who have built EVs are still figuring out distribution, and it's not an insignificant business. The ability to motivate a dealer, provide him incentives, take him on a trip for if he's winning, top in the state. These are all things that the IC world has perfected over a long period of time. I think there's a lot of room to play here, and even the existing companies coming in, they're also figuring out dealerships because the numbers are just not adding up. Even if I'm a large OEM coming in and saying I want to build an EV distribution, it is going to be quite different. And the fact that services revenue, like you said, is not as significant. Very little services revenue coming about. And we've seen actually quite a few EV dealerships shut down also quickly. They'll come in, they spend a couple of lakhs, they set it up. In 6 months, they realize they're selling 10 a month, 15 a month, just not making it, and they're going off. So I think a lot of challenges are there, but also a lot of opportunity to reimagine, where the profit pools are. Is aggregation going to be possible, right? is MBOs going to work, like multi-brand outlets? And I think this is also a big discussion. I think maybe the most important question here is, will multi-brand outlets work? Will they not work? Or will they coexist where some OEMs will not be MBO, some
We
with MBO?
fundamentally believe that EV distribution will lend itself to a lot of MBOs. It may not be entirely all MBOs. Some brands will insist and get away with having their own branded outlets, but it is going to be, the distribution is going to be similar to how you see in mobile phones, where there are some exclusive Samsung outlets, some Oppo outlets and Vivo outlets, but Apple of course, but you also see multi-brand outlets happening, and multi-brand is where the most amount of sales are moving. I think this is where we will also end up in electric vehicles. There is an important question. The important question is, when a consumer walks in and she has a specific need, then who's the person helping her with that need? One. And two, can you also then provide all the whole bunch of services, for example, repair service, for example, financing service, and can you help them decide what is the right thing, give a test drive of multiple vehicles? All of that has to be put together in a single outlet and for multiple brands possibly. Plus, we have also agreed and spoken about that there will be a lot of small brands and small variants, and that clutter will have to be demystified by having multi-brand outlets is our best understanding or best guess. We still don't know how it's going to evolve, especially for the smaller catchments. And for tier 2 and tier 3, we will see a lot more MBO. In larger cities where it's probably justified and volume gets into the hundreds range, maybe brands will continue to have their own outlet, exclusive outlets.
Yeah, I agree there. I think that's absolutely my view as well, that in certain segments, having a single brand makes sense where the volumes are justifying itself. But as you go into smaller towns, it just doesn't make sense to have
It doesn't
5
make
EV
sense.
shops. So we actually went off to Mandya, about 2 hours from here. There are about 8 EV shops there, 8 EV single brand outlets.
Yeah.
All of them are selling 5, 10, 20, and there are 1 or 2
I'm
brands
not
a little
surprised.
ahead.
I'm not surprised.
All of them are struggling.
Yeah.
All of them are struggling, saying they're not able to see volumes. And if all of them can be, into 1 or 2 shops, then
It consolidates. You are able to add economies of scale. You are able to get more revenue, and you are able to share the cost. And then it makes sense for all the ecosystem to engage with them.
Yeah.
Like today, it is very rare to find a consumer durables being sold in a single brand outlet. You have multi-brand outlets more often than not.
Yeah.
And that behavior will probably continue. The idea that a brand is so large is because those were large companies, and those companies could influence dealers in a particular way, and also they built it over 30-40 years. Many of the EV companies today are going to build a distribution now and in next 10 years, and also they are going to be a lot of them would be built on a small capital base. So I don't think they will be able to influence too many dealers to work with them in the same way they have influenced in the ICE world.
Yeah. Also, the important point that you make is also about review online, look online,
Yes.
and purchase
Research
offline,
online,
right?
Purchase offline. Yes.
Okay. So it's probably opposite of what some people do in cell phone, where I go to Sangeeta or Chroma and I look at it and then I go and look for what the best deal is. Just saying the opposite could happen here.
I mean, test ride is an important piece.
Yeah.
I think everyone would want to have at least a short test ride. How does the vehicle feel?
Yeah.
And they get a couple of people to sit on the vehicle and then see how does it feel to take a short drive. Will continue to happen in the offline world.
Yeah, I think just my last point on that is, I feel there's a large opportunity even in terms of helping stitch that up in terms of consumer discovering what they want, figuring out what the right product is for them, guiding them to the right store, and closing that loop. This is a space that we are also personally very excited on at Ohm. We think if I want to buy an EV, I actually don't know what might be the right EV for me. There are so many products, right from 60,000 to 1,70,000, the entire range is there. And each of them tells me they like something different about the product, right?
And you're not saying one important question. The most important question in everyone's mind is, where will I charge? Because the fact remains that most people are not staying on ground floors. And if they stay on ground floors, they still don't have their dedicated parking spot. Most vehicles in India don't get parked in parking spot. It's a random parking spot which they don't own. And if the parking spot is where charging is, then charging can exist.
Yeah.
So this is actually becoming the number one problem for dealerships and brands today. Even though charging, especially slow charging, has increased penetration in cities like Bangalore, but it is still a massive problem. So where will I charge is an important question, and that has to be answered before any vehicle can get purchased.
Perfect. So that stitches up discovery, evaluation, going and checking them offline and getting value added services is where the
Yes.
lot of value needs to get created.
Absolutely. Value-added services, financing. There are dealers who do RSA.
Yeah.
They do roadside assistance. In absence of having a service network, what do? I simply send someone and ping them back. Right? That's the best dealer can do, because it's mostly in this catchment area. That, I think, is an important thing which has not been solved yet.
Yeah, absolutely.
So I think VM can talk about what we think about service networks and how that is going to happen.
Yeah. Just double clicking on Nikhil's point also, like he mentioned, you can build a big business. I think right now in the EV space, it is very easy to get a lot of things right. Being an OEM, getting, let's say, building the vehicle, it's not the easiest part, but I think distribution is probably one of the valleys of death, which a lot of startups will probably, or companies, OEMs will probably not cross. And I think getting that right is very important, and which brings us back to again what Arpit just mentioned about services, right? And in this case, I think charging is one space, obviously, financing is another one, and then there is roadside assistance. So ultimately, as a user, because this is like a new vehicle itself, I really don't know what to do if something goes wrong. And in this case, I want to be able to go back to someone who sold it to me. And in this case, it's dealers, but dealers did not make the vehicle, so they don't understand about the vehicle and they want to go back to the OEM. So if someone smart out there comes there, okay, maybe I did not build the vehicle, but I know what actually goes on here. Can I actually build like a big service network here? And within the service network, can I go about and help people procure spare parts or accessories or anything out there, right? So I think that is also a big business, and it is one of the, I think, major reasons why people have a lot of dissatisfaction with owning EVs. So ultimately, what also happens is once you buy a product and if you have a bad experience, you need to have only one bad experience to actually hate it, and then you will never go back to that. You will never go back to the brand, even though the brand may have, like, say, improved 100x over the next 10 years. You will never go back to that because your image of the brand is tarnished because of the one bad experience that you had. And this bad experience could be because of the dealer, could be because of the financier, could be because of the charging network or whatever it might be. So in a lot of ways, you actually have to handheld the customer throughout their journey, and this is one of the toughest pieces which OEMs will go through. And I think that's why if you can partner with someone who probably has done this or is building in that space, it's amazing. If you can build a large business, I think it is probably going to even enable so many OEMs in winning, and in that case you might actually be bigger than an OEM as well.
Completely agree. I think it's a very important challenge and an opportunity
Yeah,
to get right and see
exactly.
how they want to build this. Related to this is also multi-brand service network.
Yes.
I'm seeing a few companies in that space where they're saying, you buy whichever product you want, you come to us and we do that. Thoughts on that business?
So, if we agree that multi-brand sales will happen, then multi-brand service is the only way it will happen. Also, because so there are two axes. One is from single brand you're becoming multi-brand, and from larger shops you're becoming smaller shops. If both of those trends are true, then you will see that the service network will be stripped of the small shop or multi-brand and will become centralized. So like in a mobile phone, you buy from a Sangeeta mobile, but you can get service at the brand shop. And the brand shops where you get service, maybe there are 5 in Bangalore, while you can buy in 25,000 outlets the same mobile phone. So that is the way it is probably going to go, because a mobile phone really doesn't require any repair. An electric vehicle also will require much less repair than ICE vehicle. Therefore, the business model has to consolidate towards a much smaller, much more concentrated service network.
Yeah.
I suspect it will still be single brand service, but it could also be multi-brand service where there are similar vehicles and very simpler parts which everyone can replace. Again, this is largely from the perspective of a two-wheeler. In a four-wheeler scenario, I think it's a larger purchase. People want a lot more confidence. People want a lot more capability. It will continue to be in that single brand paradigm as compared to the multi-brand paradigm.
Yeah. So I think for folks listening, I think we are all aligned to say challenges are quite a few, opportunities are immense, and there is no single right to win by any entity as we stand today. So whether you're a multi-brand outlet, multi-brand servicing outlet, or an OEM looking to build distribution, there are a lot of opportunities to get this right, to seed the market and see growth. I think that would be my summary of this section.
Absolutely. And we totally believe there is a massive opportunity out there for startups to play in the EV distribution business.
Amazing. So people looking to raise money for companies building in EV distribution, EV networks, etc. These are the gentlemen to talk to on it. So let's turn to a section that's quite close to my heart: EV financing, and a space that we operate in as well at home. So I have a lot of questions.
We also look forward to learn from you, Nikhil. So yeah, maybe we should ask you a couple of questions.
Sure, let's go.
So tell us, how do you look at what is the broader landscape of EV financing as from your perspective? Because there are multiple category of vehicles, there are multiple different business models. How are you looking at it? And of course, there are multiple different kind of players.
Yeah. So let me just lay the landscape out a little bit. Two-wheeler financing, last year there were just a handful, less than a dozen people doing actively two-wheeler financing. Today I would say there will be at least 20, 25 banks and BFCs in two-wheeler financing. Financing penetration for ICE vehicles is between 65 and 70%. EVs are still only between 40 to 50%. So that means there's a lot of room for financing to grow. I think banks and NBFC are still getting comfortable with the asset class, the distribution, the OEM, etc. That's all happening. So that's two-wheelers. Three-wheelers, I'd say L5 and L3. L3, very different market, and there have been quite a few players that have emerged in the e-rickshaw category that are essentially financing them. These are businesses where the asset cost is quite low, about 1.2, 1.5 lakh rupees, and then there are lenders who are borrowing at quite a high cost, but also able to take a lot of risk. Essentially, the segment is difficult. The collection costs are quite high, delinquencies, etc. So the L3 category, there are quite a few financiers that have done a great job over the last 7-8 years to kind of seed the market and grow that. We have not seen too many large banks or NBFCs play in the L3 category. It has largely been new age NBFCs, lenders, formal, informal, that are in that segment. Then we have the L5 category. There, I think product quality was still coming about, and therefore lenders were still conscious about whether they want to get into that or not. But in the last 3 years, I've seen quality of vehicles dramatically improve, and therefore lender confidence have also increased. I can tell you, last year, maybe about 18 months ago, there was no large NBFC or bank looking to do L5 comfortably. But today, most of them are comfortable doing it, whether it is the likes of Sriram, to Bajaj, to Chola, to IDF. I don't think IDFC is in this, but quite a few large banks and NBFCs are in this space. So that's quite a step forward. I thought it would take a little longer, but I think banks have come at this quite quickly. Also, thanks to entrepreneurs who have built good products out and they have been able to prove that it works. Four-wheelers, I don't see a challenge in EV financing because there are no new incumbent OEMs per se. It is large OEMs like Tatas, Mahindras, etc. that are building vehicles and selling. And the asset cost is already at 10 lakhs minimum, 14 lakhs, 26 lakhs. So the quality of people coming in are folks that are already bankable, already have a credit card, have a credit score, and the existing banks operate in that space. Quite competitive. So hard for a fintech to come in and say, I will charge 12%, 13%, where banks are comfortable doing 9, 10, etc. So I don't see large challenge there. The other area is B2B EV financing. Huge opportunity. I think so many so many fleet operators are emerging, so many new companies building battery swapping or just battery swap station businesses. All of them need capital and all of them struggle for capital. This is an area that Ohm Mobility operates in also. We help facilitate money for them. But we just think the need is, almost 5x or 10x of where the capital supply is today. Largely because of lenders still getting comfortable with the business model. The moment I say I'm selling a scooter without the battery, the lender's like, wait, what am I buying then? So I think lenders are getting comfortable, and most of these companies are 6 months old incorporated, no balance sheet, no revenues, hardly any capital. So B2B lenders are also figuring out where the play is going to be over here, and need is definitely there. In that, many of them want leasing. So I think the need for capital is undoubted, right? The growth that you have shown even in the market. So when we looked at this, and Venkatesh, I think your report also talks about it, roughly somewhere between $2.5 to $3 billion is going to get financed into electric vehicles this year, and that number is going to go to 50 billion per year by 2030. So the need for capital is huge, and our take is that there is room for multiple people to exist. It is not a winner takes it all market. Just like in IC, you'll find one person who has a 200 crore loan book who's only operating in South Bangalore, and he's done only in a vehicle there. Once vehicle sales happens, there will be room for a lot of them to play. So I think it's a fantastic opportunity from a macro standpoint. And maybe I'll just summarize this landscape piece by saying very large opportunity. Very huge need for capital and still uncertainty, right? Where people are saying we want to innovate with new models, etc. And the third is also customers prefer, I mean, given that we are all on so many apps and we are all digital, the customer experience has to get better than what it is today. The moment you say I need a EV, if you tell me I need 20 documents, I'm like, I'll just rent a vehicle for like click of a button, right? So great customer experience, large opportunity, and need for innovating on models is what makes it very unique and ripe for companies to
But
play.
tell me, inevitably, you will experience, and this has been our experience as well, the moment you start building a business, the acquisition is offline, the servicing is offline, the collection is offline. What is the difference? Where is the space for a new age company to play? Is there a space for a new age company to play? Because everything has been done by multiple people in past. Yes, a new age company can be ahead of the market, but the moment the market catches up,
Yeah.
the opportunity
Like
will
at some point in time, let's say right now, if there are a couple of startup fintech companies and they're offering the best rate possible because banks have not entered those segments, 5 years down, when the market is lucrative enough, when the secondary market is already established, banks offer like a significantly lower interest rate. Why would a fleet operator or a customer or anybody out there not opt for the loan that that bank is offering?
So I would have a different answer if you asked me this a year and a half ago and versus now. So earlier I said no, I think there's a right for many people to exist. But I think with the cost of capital coming down quite quickly with banks and NBFCs coming, it's not going to be very easy to be a high NIM business in EV financing unless you have some kind of differentiation. So for example, I think a segment that is completely untapped is for example gig workers, right? They are a segment that is not very easy to lend to. So what fintech we have seen is they don't go after home loans, right? Home loans is very established, very competitive. They go after blue-collared folks, people that are not getting access to credit easily, and large businesses have got built there. I think similarly, asset financing business, to find where those pockets are, I think there is an opportunity to lend. But the moment banks, NBFCs, or large NBFCs enter, I completely agree with you. You will not be able to win on cost of capital. What you will perhaps be able to win on is consumer experience, turnaround time. But to be honest, I'm seeing turnaround time from large NBFCs also get very quick. So for example,
Is it?
IDFC, they can disburse, they can give you a loan approval in 3 minutes and they can disburse to the dealer in 30 minutes.
Amazing.
Most other lenders are between 1 day to 3 days to 5 days, right? So at that scale, they're also able to execute. So they're hyper competitive, right? So for a company to come in and be pure lending, I think you have to think very deeply about where the differentiation is. Whether you can do something with batteries, whether you can do something with second-hand market, whether you can do something with taking risk on what happens to the asset after, or continue to a subscription model, right? These are the kind of things where companies will have to think deeply on how they're innovating on the credit product, on the customer delivery and the credit product. But cost of capital, I think, very, very hard to beat, right? Unless something changes and climate finance ends up playing a role, I think that's not easy to crack. So we've also actually gone down the path and spoken to multiple large debt houses that talk of single digit cost of financing. It's not been easy, right? Because it's not straightforward. They're still wanting to figure out where the NBFC is investing, how they're going to lose. You need traction for a certain, you need to show vintage. So it is hard to justify. So in the short run, getting low cost of capital is going to be this thing. But that's where my view is.
Not bad. Not bad.
Yeah. I see that your report has a couple of very interesting pieces, which is the newness of EVs give rise to an opportunity to underwrite digitally, etc. I want you all to talk about that and
Yeah. Okay. So I think again, like we keep talking about these EVs are a new breed of vehicle, software first, right? There's a lot of data being collected, and when we say data being collected, actually even ICE vehicles do collect data, but because there are so many sensors and there are EVs by default have softwares running in most of their components, you can actually log the data, and it's going to be very easy for you to get that data out. Every vehicle actually is capturing data via the OBD board, but getting that out is very difficult and processing that is very difficult. But in this case, because you are designing this to be a software first vehicle itself, you can actually pre-program it and make sure that data is available in the right format that you require. So a lot of ways, I think there's a lot of exchange of data that happens from the cloud to the component via the vehicle and everything, and the same data actually flows back as well. And I think this is one of the major advantages of EVs as well, because in a lot of ways you can control the vehicle. You can, especially for a financier, it is going to be very, very, very helpful if they can actually turn the vehicle off if the person who's riding it defaults. Obviously, it leads to a bad customer experience in some ways if you don't manage that well. But this is something which a lot of people are actually riding on, and it may actually make a big difference in lending it out to those blue collar workers and people who do not have risk score. So in a lot of ways, this is I bring this back. This is actually climate tech also, because you are enabling access to something green and enabling access to credit to people who would not have had this if not for this technology. So I think it all ties back to the entire theme that we have also been talking on and about.
Yeah, fully on board. Like I agree 100%. And the fact that it's smartphone on wheels, right? I've seen this play out in my previous business where IoT fitted inside an asset can allow you to finance to people that you don't know where they are. It doesn't matter, right? You just have to see whether they're using it or they're not.
That's it.
How risky they are. So I would bet that in 5 years from now or 7 years from now, you will not find EVs unconnected. You'll be at such a disadvantage of being, even with the cost of, today it's about 3,000 rupees.
Any vehicle are connected.
Yeah.
Every vehicle will have connected interfaces.
And told even cars nowadays. My friends, Kia, I think you can turn it on before you go in.
That's
and,
right.
stuff like that.
Things are already happening. Yes.
Yeah. So I think with that customer experience, why would I want a inferior customer experience, right? So I think
No, the two different things.
Yeah.
One is a customer experience and all the consumer facing side. So there is, switching a car from a remote distance, switching on ACs or locking the car, etc., are important things. However, that doesn't mean that your business and the product is software first. A lot of components in ICE engines also is software first, but that software is hard to reach, it is hard to change, and it is not built in a way that it can be upgraded very easily. There's no OTA update, for example, happening in software. Here in electric vehicle, because everything is fundamentally software first, you can actually collect data once, and secondly, software can actually be optimized. So the performance of vehicle can actually improve over a period of time as compared to what can happen over ICE. That is a fundamental difference. Yeah. How that plays out in the financing world is that because everything is software first, you have a lot of data available. And this data can be used in multiple ways to underwrite or to give some guarantee or to make sure that lender doesn't lose money.
Yeah. So we think that when a lender is evaluating an OEM, today it is still saying, show me your balance sheet, show me how much capital you have, how many vehicles have you sold. But I think the future is going to be where I'm going to ask you to come to the table, show me your vehicle performance over the last 2 years. And your data has to, and you should have an independent team that is able to audit that and say, has your battery performance been on par? Has it been subpar? How many warranty claims have you done? And even warranty claims, right? It doesn't have to be something vague. It can be, hey, I opened my app, it is showing me a degradation more than what it is supposed to be. There's no reason why you shouldn't, claim that.
Exactly.
So I think the possibilities of what one can create on this, mobile smartphone on wheels is huge, and in financing it is massive, right? I think digital underwriting is going to be very, very important for certain segments. I think you said that being able to turn off the vehicle is inferior customer experience. I think it's actually much better. So if you've actually sat with a collection agent, it's not pleasing for you to be at the other end if they're coming to collect from your house.
Yeah.
They'll show up, they threaten you, and if you live in smaller areas, everybody knows that he's coming to recover your vehicle.
Yes,
and when that goes away with that vehicle, it is a big black mark in your community, right? I'm saying dignified. किसी को कुछ नहीं पता है. मैं रात को बंद कर दूंगा. Tomorrow morning you open the app and you make a payment. Nobody needs to know. I think it is great customer experience. right? It is good. It's very dignified customer
It's
experience.
better customer experience.
Yeah,
From
better.
what they're getting.
Exactly, it is better customer experience for you to do
Yeah.
that. And I think if companies like Bounce and Yulu had solved this IoT-based rental vehicles, there's no reason why that cannot be replicated in EV financing.
Yes.
And this is something that we are also interested in and something we're building. So along with the platform that we're building, we're going to layer on a IoT-based control system as well to give to lenders. Hey, you come to our platform, I'll help you find the customer, I'll help you, underwrite the asset. And once you deploy the asset, I'll give you dashboards for you to be able to understand how the asset is tracking so that you can decide this OEM double down, this OEM stop, this customer profile go down, because you can do that much more proactively than wait 3 months till he's not paid 3 EMIs and then you send a collection guy to his house, right?
Yeah.
So,
And a parallel to draw here is financing. Obviously, insurance is part of this as well, right? With this particular approach, with so much data coming in and going out as well, remote diagnostics is possible. As an insurance company, I can know when a vehicle is actually not working, when it has had an accident, or again the after service point that we were discussing. You can actually as a smart company, if I have the ability to control these vehicles, I can control the diagnostic cells also and choose whether I want to service them now. Can I actually remotely make some modifications so that it actually starts? Maybe the battery is degrading at a much faster rate because of overheating issues or something. Can I maybe control the amount of electricity that is being charged out, right? All those things are possible, and this is something which finances would love. It all comes back to financing. The better the vehicle, like it is amazing, right? The longer the vehicle, I would love it. So I think it all ties back elsewhere.
However, there seems to be a space, Nikhil. The space is that EV financing is tech and finance, right? I am suspecting that most lenders are very good at finance only. Most lenders, traditional lenders that is, are not very good at tech. You will not be able to do an excellent job of EV financing if you don't do a good job of tech. So there could be two kind of businesses. One is someone who is a tech first lender and then builds an entire stack up. They are going to be put against all the incumbent lenders and going to be having a cost of capital issue and therefore scalability issue. However, if the lenders like let's say HDFC Bank are going to become the main important lenders, then someone should be able to give them the tech knowledge so that can be bunched together and then they can actually leverage this.
So
I think that's a fantastic idea. We haven't yet come across companies who are doing this. I think we have spoken about this multiple times.
Yeah.
Where can you help a lender become tech first and leverage them in such a way that it makes sense to them? Like for example, there are always third-party software companies. Companies like Mobileye or Sibros who are building software for OEMs. Can someone build software and have data capability for lenders? I think that's an opportunity we haven't seen yet.
absolutely.
Emerging. Yeah.
So, brings me to the point on how you all as VCs are looking at EV financing as a space. Is it a place where you think there is VC backable businesses that can get created? If so, where it can be, and what are the areas that you think this space is going to be very hard for us to build a venture backable business?
So if you think about a traditional NBFC model, we are excluding banks here. Traditional NBFC model is a NIM model. You have to have a margin in the to make the business work. Now the challenge with this business is that if you are not a profitable company, which most startups won't be, you will always be dependent on. You will always be given a multiple of the equity that you have raised. As a consequence, the size of the business and hence the revenue of the business is proportional to the amount of equity that you have raised. As a consequence, if you are not very high, if you're not raised too much equity, you can't raise more equity. And in the market, higher revenue leads to higher equity. So if you haven't raised enough equity, you can't raise more equity. So you're always struggling. You're playing catch-up game if you're a traditional NBFC. So where we think is a massive opportunity in the market is that if by having a marketplace, or if by having an asset management, or if by having any such other method like Ohm Mobility, where you are saying, I'm connecting buyer and seller, I'm connecting two sides together, and I will collect my margin in the middle. Those are much more scalable businesses. We used to think that EV financing will be a 2-year opportunity before NBFCs and banks come in. Has not really played out. I think banks and NBFCs have been far more aggressive than we imagined them to be. Now that they're there, what is the EV financing players going to do? Maybe they'll go to niche areas smaller area, but that's not going to be a very large market. The larger market, then therefore the scalable business will be something where growth is decoupled with equity raised. If you are able to do this, I think there's a fantastic opportunity for venture scale businesses to be built.
Interesting. Okay. Do you see any existing businesses that can build a NBFC within them? For example, will any of the new age EV OEMs want to build a
That is
captive
natural.
NBFC?
It is bound to happen. Everyone wants to capture more and more part of value chain. Everyone will. So all the OEMs, when they become some large scale, they will want to have their own financing arm and they will have their insurance arm at least. And these will all be available to all their dealerships and outlets. Bound to happen. We haven't seen that happening yet. Of course, the incumbent OEMs, Mahindra and Tata, already have their financing insurance arms and they are wherever they are. But new age OEMs will also get in the same place. The other thing that the new age OEMs will do is that they will also give a lot of value-added services on their vehicle, which could also lead to financing or give more data to the financier so that it can be financier can underwrite better.
Right, absolutely. For us, I think maybe I'll just one last point is the space of EV financing has evolved so quickly over the last 3 years. Arpit, we spoke in 2020, right? And I said we want to do something in EV financing. You said too early, wait for it.
It was too early then.
Yeah, I mean, you said it is, it was COVID year, right?
Yes,
So
yes,
there was
yes.
hardly any sales
That's
happening.
right.
Mobile had taken a big hit. And since then, in 2021 end, we realized there's a massive opportunity to go financing.
Yeah.
We went down financing and then we quickly figured out that, incumbents are moving quite quickly. So I think the ability for us to,
So
we have had to pivot.
with them.
Yeah, exactly.
Then compete with them.
We can't beat them at their game.
Yes.
At least this has been my perspective, and also it has to be based on where the founder thinks their most value is, right? If I was a hardcore lender, could I go and build an NBFC? Yes, you can build a 100, 200, 500 crore, kind of lending book. But I think the space has evolved quite a lot, and we have also had to take the turns very quickly to stay relevant, because you pause on an idea too long and the market has moved forward. As you said, was that race against death or as a startup, So I think EV financing has been a very exciting space and a lot of room to grow, but a lot of gaps that still need to get filled. Data, software, working with banks. Like you said, OEMs will have to hire technologists to build really great products. Similarly, lending companies will have to work with technologists to provide great customer experience and asset management and things like that. So for anybody interested in EV financing, I think like everything else, I think it's a fantastic opportunity, large growth market, a lot of uncertainties still exist, and there's still gaps. Customers still need capital, demand outstrips supply 5x, 10x now. So definitely an area to consider. Happy to engage for anybody that wants to talk offline and learn more. Venkatesh, Arpit, feels like whenever we get chatting about EVs, time just flies, and any amount of time is not enough. Clearly, we're all
I know.
Clearly we're very passionate about this. So great, engaging conversation about distribution and EV financing. So thanks for your views. And look forward to I think the last part that we will do. We've not covered two important sections, which is essentially battery swapping, charging, and battery recycling, which is an important part of your report. I think we'll take that up in the last section.
Super. Thank you.
Perfect.
Let me do this again, Nikhil.
Absolutely. Thanks for your time.
Thanks, Nikhil.
Thanks, guys.